Hi, my name is Glenn Hasselman. I'm just making this video for the free accounting software users to show you guys how to enter your opening balances into free accounting software. So the first thing to point out is that this is only relevant for Bassoft cloud businesses, so that's where we're hosting the data. If you have a locally stored file, then there is no balance sheet, so it's not relevant. It is good to have a balance sheet, review it and reconcile it, and also to have a cash worksheet and reconcile to the bank account. And if you want to upgrade to Bassoft, there is a video on how to do that. Okay, I've set up this organization for the purpose of this demo, and I'll just point out a few things that I've set up here. This is the standard chart of accounts. I've set up an account cash on hand, which is just a regular asset account. That's not actually in the default chart of accounts. And I've also set up this one BAS roundings. This is actually not in the default chart of accounts, and I probably should add it. So if you watch this video at a later date, just check that it's not already been set up. And it's just an expense account. And it's an account that I show how to set up in the BAS videos. It's an account used for when you're paying the BAS, and there's like a cents rounding because the BAS is to a whole dollar, but your transactions to the cent. But I'm also using it for the opening balances in relation to GST. Now on the tax codes, actually another one that I've set up was GST paid to ATO. This really should be in the default chart of accounts. I'll show how to set it up in the BAS video, anyway, the name is GST paid to ATO. Percentage is 100%, and that is because when you're paying GST or receiving GST from the ATO, that is all GST. There is no other component to it. It's set up as a liability, and the BAS classification is GST paid to ATO. There's another one for GST received from ATO as well. I haven't set that up, and I'm just going to demo the sales / accounts receivable side of opening balances set up on the purchases accounts accounts payable and GST receivable side of things. It's the opposite, so I'm going to leave that. Let's set that up. In the counterparties, I've got one set up called not applicable. I think it's useful to have one called not applicable for when you're buying stuff from like a supermarket or petrol station or whatever, where you're not really too concerned about recording the name of the supplier, or when you're doing journals, as we will be doing in this video, where it's not really relevant. I've also set up one for a customer. I've just called the customer a customer because we will be actually entering a few invoices, and on those you do need to put the actual customer name. Okay, one other thing to show you is on the My Business Details page. You'll have your proper ABN and branch, but the thing I want to show you here is financial year start date and financial year end date. I've set it to the 2021 financial year, and so I've set it to from 1 July 2020 to 30 June 2021. The date that I'm going to enter opening balances is the 30th of June 2020, so it's the day before you start using free accounting software. And one other thing to point out here is the ledger closed date I've got blank, so it's going to let me enter transactions with any date on it. After you've entered the opening balances, you might like to move it a bit forward so that those transactions can't be accidentally changed, or you can't accidentally post a transaction into that period. Okay, so let's enter some opening balance. The first one that you'd want to enter is on the cash worksheet. So you'd want to enter your opening cash balance so that you can then enter other cash received and cash payment transactions and reconcile to your bank account. So it's just entered as a normal cash transaction. There is no separate opening balance transactions in free accounting software. So we'll just do cash received. Now, as I mentioned, the date is going to be 30th of June, so it's the last day of the prior accounting period that we want to pick, and we're just going to pick the counterparty not applicable and opening bank balance. Add a line, and let's say that opening balance is $2,000. Now, the account I'm going to pick, I'm just going to pick cash on hand. Now, don't be confused that that's what makes the cash at bank balance go up. That is a separate account that I created, like I showed you at the beginning. It's actually just a temporary place to put this $2,000, and we're going to clear it out and move it to all the appropriate balance sheet accounts that it really belongs in. Okay, save that. Now, if we look at the balance sheet, we can see that we've got the $2,000 cash at bank, and then we've got a credit to this cash on hand of $2,000. So that's a minus $2,000 there. That's because I picked that cash on hand account. Now, obviously we don't have minus $2,000 cash on hand. We've got to clear it out into all the appropriate accounts. And I will show you how to do that in a minute, but I think it's useful or easier to enter your accounts receivable before we go and do that. So let's go and do that now. So with accounts receivable, we want to enter every single sales invoice that is outstanding. That's important because when you're receiving cash after you start using the software, you need to enter it against the invoices that they're paying. It's also important because on the BAS, particularly if we've got a cash basis BAS, software needs to know the invoice date as well as the date paid, so it needs that information. So we just go to a new transaction, do the sales invoice, and in this case I'm not going to pick the 30th of June, I'm going to pick the date that the sale was actually on. And picking the actual customer, and rather than writing opening balance, I might write the actual description that that was put on the sale, and let's say it was $33,000. Now I'm just going to put the cash on hand account because that's the account we're using as that clearing account. So I'm just going to be putting all these kinds of things there, and we'll clear it out in a moment. For the GST, you actually have to put the correct GST code. So if you register with GST, in this case I've picked GST taxable sale, and then save that. Now let's have a look at what this has done on the balance sheet. And we've got now our accounts receivable. We've got the $3,000 GST payable that relates to that, and cash on hand is $32,000 credit. Now that will have at this stage made your accounts receivable balance correct and your cash at bank balance is correct. Cash on hand is obviously not correct, and GST payable may not be correct because this GST payable only relates to the GST on your outstanding invoices, but you might have a sale where you have, like, let's say it's dated 1st of April 2020 and you've been paid for that, but you haven't yet lodged the BAS related to that, so that money should be still sitting in GST payable. Okay, so why don't we just go and enter that now, and when you do this, you'll have to note from wherever you're getting these opening balances from what your GST payable is at this stage versus what you actually want it to be in the end. So let's say general journal and doing a new transaction. Again, just a normal transaction, but it is dated 30th of June, being the last day before you're starting using free accounting software. In this case, that's the last day of the prior financial year. If you were starting partway through the financial year, it could be another date. Anyway, we want to just pick the not applicable and then put opening GST payable balance. Let's put adjustment to be 100% clear that this is not the full GST payable balance. Add line. Now we want to credit GST payable, so we put a minus. So on the general journals, credits are minuses. So let's say it's $7,000. Now this is where we use the BAS roundings account, and the GST paid to ATO. So this is not actually a GST that has been paid to the ATO. We're just using that tax code to get the balance into that GST payable account. Now the tax percentage rate on this GST paid to ATO is 100%, which means that the amount is minus 7,000 and the tax amount is also minus 7,000. So the amount that gets posted to this account is zero because it's the amount minus the tax amount that goes into the in this case the BAS roundings account. So even though it's a zero, it's a good idea to adopt some convention about which account you use to use on these types of GST transaction lines. Okay, and now we have to balance the journal. So it has to balance to zero. So we're going to put a $7,000 debit to this cash on hand account that we're just using as our clearing account. And then save. Now if we go back to the balance sheet, we should now have accounts receivable correct, cash at bank correct, GST payable correct. Cash on hand is still incorrect and we need to clear that out. So there is only one thing remaining, which is to clear it out to the various, record the balances of the various balance sheet accounts like plant and equipment, bank loan, and actually retained earnings. So I'll show you how to do that now. So we go to the back to the general journals and do a new transaction. Now this journal could be combined with the previous one I just did. I'm just showing that separately for the purpose of demonstration. I think it's a little bit easier to understand rather than try to sort of correct the balance of two accounts in one journal. So, but anyway, you could do as many journals as you like to get this right, as long as you get there in the end. Okay, and I'm just going to write opening balances. Okay, so now we're going to put some, or in fact, before we do this, this is the journal that should clear out cash on hand. So I forgot what it actually was. You shouldn't really forget, because you'll be working to actual numbers, and I'm just sort of making these numbers up as I go. But yeah, so it's a $25,000 credit, and this is the final bit of the puzzle, so that should zero it out, unless you do actually have some cash on hand, in which case it should move it to the correct balance. Okay, so let's go and do this journal. Opening balances. So we need to debit cash on hand by 25,000 to zero it out. So let's say you had some plant and equipment of $40,000. Just put that in. Let's come up with GST taxable purchase as a default. Should be GST not applicable for this. And you just repeat that for as many assets as you've got. They should be debit balances, so positive numbers. Then on the liability side, let's say you've got a bank loan of $20,000. Okay, so on the liability side, they should be credits, so enter them as negative figures. Credits are negative on these general journal pages. Okay, and then the last thing that you should have to enter is your retained earnings balance. Now, there is no retained earnings account. The way the software calculates retained earnings is simply by summing up your profit and loss for however many years of history there is in there. So what we want to do is just put it to some profit and loss account. So let's say the retained earnings, if you've done it all right, it should balance the journal to zero. So let's say the retained earnings was 45,000, and the account that I would pick is just this other revenue account. Again, make sure that GST is GST not applicable, and the account is other revenue. So with this account being a profit and loss account, as well as the date over here being in the prior financial year, any balance sheet that you look at will sum this amount into retained earnings. So let's go and have a look at the balance sheet and see how this all looks. Okay, so we've got accounts receivable, same as before. Cash on hand is cleared out now. We've got our plant and equipment, or the assets that you've entered should be there, the liabilities should be there, and we've got this retained earnings account now that's come through from the entry to other revenue. Okay, I hope this video has been useful to you, and thanks for watching.